Assalamu alaikum. This is Sir Abil Ahmed from Abil School of Accountancy. This is our first class of SBR. First of all, I'm going to discuss the paper pattern. Second, I'll be discussing how I'm going to teach you the entire course. And plus, I'll tell you the proportion of the theory which comes in exam and the proportion of the calculation also. So let us first discuss the paper pattern of SBR. In SBR, question 1 is of 30 marks. And this 30 marks question basically comes on consolidation. But a very important point, in SBR consolidation question, we are not expecting from the student to prepare entire SOFP, entire SOCI or entire consolidated cash flow. Basically in SBR, what is going to happen in consolidation questions, most of the time, students are required to explain the accounting treatment rather than preparing the complete consolidated SOFP, complete consolidated SOCI or complete consolidated cash flow statement, which used to happen in paper P2. So now the question is, SBR consolidation questions, are these questions will be difficult as compared to P2? The answer is no, they are not difficult. If you are having a really good command on consolidation, then obviously questions will not disturb you at all. Let me give you an example. For example, if your examiner is asking you a question after examiner has calculated the goodwill, he is going to simply ask you the question that what are the mistakes in that goodwill computation and what is the adjusting double entry. Obviously, only those students can identify the mistakes in the calculation of the examiner. Those they themselves know that how to calculate goodwill. How do we study consolidation in SBR? The first class of consolidation, when the time comes, inshallah, it will be on we'll be discussing in first class entire consolidation relating to F7. So that you should be having an overview what you have studied in F7. Then at least 2 to 3 classes I'll be conducting on P2 consolidation. And then stage 3 comes, that is SBR. So if we directly jump on SBR questions, then obviously we will be having problems. So you can say there are 3 layers in which we go to SBR questions. Class 1 we'll be discussing entire F7 and at least 2 to 3 classes on P2 consolidation questions, and then obviously we'll go to SBR questions. And once if you have done all the past papers of SBR, you will have no problem at all in consolidation. And it means that if any one of you can manage to get out of 30, let's say around 22 to 24 marks, then obviously chances of clearing this paper in first attempt are much more higher, because getting around 22 to 24 marks out of 30 means the student is almost passed. The student is almost passed, no issue at all. Now let's talk about question number 2. Question number 2 is going to have 20 marks. Now in which area question number 2 will come? Examiner has not specified any area. It could be any IAS. Examiner can ask any IAS in this question. Examiner can even ask any IFRS. Even examiner can ask IASB framework also. So exactly on which topic question 2 is going to be, we don't know. So which means that we have to study the entire syllabus. When it comes to section B, we'll be having question 3 and question 4. Both will be having 25 marks. And these 25 marks questions will be having around 4 to 5 parts. Again, these question number 3 and 4, normally examiner is going to ask at least in one question. You should be mentally prepared that in one question you are going to face around 5 to 6 different ISS, or maybe 2 to 3 ISS and 1 or 2 IFRSs. And it is also possible that 5 to 7 marks examiner can ask, even 10 marks question examiner can ask on current issue as well. But let me explain you one more thing. When it comes to SBR paper, I'm talking about the paper. At least I would say 90% of the SBR paper is theoretical. 90%. So in actual exam, you will be fine. You will have calculation area hardly 10%, which means that you need to be really good in drafting. So it means throughout the course we'll be working on the drafting skill as well, because if you are not good in drafting, obviously then it will become really challenging to pass the SBR, because it's a misconception that it is a theoretical, a numerical paper, calculation based paper. It is not a calculation based paper. When it comes to the exam, 90% of the paper is going to be theoretical rather than numerical. So throughout the course, inshallah, I'm going to work on your drafting skill. One more thing. What is the easy way to pass SBR? Let me tell you. It is very easy to pass SBR if you have a really good command only on 2 to 3 areas. Number one is your consolidation. And number two, in every attempt of SBR, you will see a question on ISB framework. In every attempt. It means that you should be expecting around 5 to maybe 7 marks on ISB framework. Which means that if, dear students, you are really good in explaining ISB framework, then obviously these 5 to 6 marks you will be able to get it. And one more thing, in every SBR paper you will be having a question on ethics, and normally the question on ethics will be around 6 to 7 marks. And every question of SBR which is on ethics can be solved only in 7 steps. Only the 7 steps. What are those 7 steps? I'm going to explain you. But to be very honest, if any one of you is really good in consolidation, number one, if you are really good in ISB framework and you are really good in ethics, then obviously to pass this paper becomes really easy. If you can manage to get around, let's say, 22 to 24 marks from the consolidation, from framework, if you are able to get around 90% marks from the question, let's say if you can manage to get 4 to 6 marks, and same applies here if you can manage to get 5 to, let's say, 6 marks. So it means only the 3 areas. If you're just focusing on 3 areas, you can easily get around 30 to 33 marks. You need to be really good in consolidation. You must be really good in ISB framework. And the last one is you must be really good in ethics. So only these 3 areas can give you very easily around 31, 32 marks. Then what else we need to do in order to pass the paper? Obviously, all the ISs which are in the syllabus and all the IFRSs which are in the syllabus. But I'm just giving you the direction how to pass the paper. So if you're really good in these 3 areas, then obviously your chances of clearing this paper in first attempt becomes very high. Okay, what do we have in the syllabus and how we are going to cover? I'll take 2 minutes on that. We have almost, I would say, each and every IS and IFRS which we have studied in F7. Like in the syllabus, we are having IS2, we have IS7. This IS7 will be covered when we'll be studying, inshallah, cash flow statement. We do have IS8 in our syllabus. We also have IS10. We have IS12, income taxes. We have IS16. We have IS20. We have IS23, IS24, IS27, 28. These ISs will be covered when we'll be studying, inshallah, consolidation. We have IS32. We have IS33. We do have IS33 in SBR, but I would say the least important IS. We have IS34 also in our syllabus. We have IS36. We have IS37. We also have IS38, IS 40, we have IAS 41 also. When it comes to IFRSs, so let me write over here. We do have IFRS 1 in our syllabus, we have IFRS 2, we do have IFRS 3, but this IFRS 3 is also going to be covered in consolidation. We have IFRS 5 in our syllabus, we have IFRS 10, 11, 12, all these are on consolidation. We also have IFRS 15, IFRS 16. So we do have IFRS 8 also, operating segment. So these are the few IFRSs and IASs which are in your syllabus. Consolidation will be covered in IAS 27, 28, IFRS 10, 11, 12 and IFRS 3. All these are covered in the consolidation topic. Apart from these IAS and IFRSs, we do have obviously IASB framework in our syllabus, very heavily, and which comes almost in every attempt around 6 to 7 marks. And let me give you an idea. Normally what happens on each ISS almost, or on each IFRSs, you will be finding the ISB conceptual framework discussion also. For example, let's say we are discussing under IAS 16 property, plant and equipment asset recognition criteria. Once we have discussed what IAS 16 says, for example, for asset recognition criteria, then we need to know what is actually revised conceptual framework is saying about the asset recognition criteria. And you will be surprised to know that asset recognition criteria, for example, which is in IAS 16, differs from the asset recognition criteria which is in revised ISB conceptual framework, because the asset recognition criteria which is in IAS 16, it is according to the previous conceptual framework. So actually now we have revised the conceptual framework, but we have not revised the ISS yet. So now there is a question. Sir, the question is, if the difference comes between two things, one is if IS is having a different recognition criteria and revised conceptual framework says something else, then obviously which one we need to follow? You need to get a really good concept. The concept is, whenever the treatment of IS or even IFRS is different than conceptual framework, then we always follow to ISS or IFRSs. Then we don't follow to conceptual framework. But we need to study the conceptual framework, and we'll be studying conceptual framework throughout the syllabus. Okay. Another thing which we need to study is that is current issue. So normally the current issue area is covered from the recent technical articles. We need to discuss those recent technical articles as well. Apart from that, there are other areas also in the syllabus, like we do have even ratio analysis in our syllabus. We also have alternative performance measurement in our syllabus, and there are little bit more things also. But we need to know how to pass SBR, because if you are working really hard but you are working in a wrong direction, you will not be able to reach your destination. So how to pass SBR? Number one priority is your consolidation. Obviously, in order to learn consolidation, you have to have a really good command on ISS and IFRSs as well. So if you are really good in consolidation, ethics, ISB framework, ISS and IFRSs, the job is done. Around 90 to, I would say 95% of the paper comes from this area. So while sitting in exam, for example, if you have a really good command on the 90% of the paper, and let's say if you don't know the 10% of the paper, then it's still okay. You can easily pass the paper. So you have to concentrate on ISS, IFRS, consolidation, ISB framework and ethics. Okay. Other thing, how do I teach? I always teach from scratch. Okay. I always assume that students, they do not have any previous knowledge. While teaching to you, dear students, I will never assume that you are carrying any knowledge from your F7. Because by the time students, they reach SBR, normally they forget whatever they have studied in F7. So whatever we are going to study, we will be studying from scratch. We will be studying from ABC. And second point, throughout the syllabus, we will be discussing the past papers as well. We are not going to study like this, that first I'm going to complete the syllabus and then we'll be discussing the past paper. I think that's too late. We need to discuss relevant past paper of relevant ISS and IFRS, which we have, let's say, discussed. After completing each and every IS and each and every IFRS, the relevant past paper will be discussed over there. So we need to discuss the relevant past paper side by side, so that you should be having a really good idea how to prepare yourself for SBR also. Because when I'll be discussing, I'm going to teach you any IS or IFRS, I'll be giving you the knowledge. If you just share knowledge in SBR, you are going to get 40% marks. But when we'll be solving the question in the class, then it will give us the application. So we are not just supposed to focus only on knowledge, we need both the things. We should be having a really good command obviously on knowledge, and after that we must be having a really good command on application as well. So it means if you are really good in knowledge as well as in application, then obviously you can easily pass the paper. So let us now start the first IAS. The first IAS which I'm going to start is IAS 16. That is property, plant and equipment. Okay. The first point. The first question is, when it comes to IAS 16, property, plant and equipment, if someone asks you a question, the question is that what is the objective of IAS 16? Somebody has asked you a really simple question. The question is, actually, what is the objective of IAS 16, this property, plant and equipment? Let me tell you, and everything is written in the notes as well. Actually, the objective of IAS 16 is that IAS 16 is going to actually prescribe you. IAS 16 explains the accounting treatment of tangible non-current asset, how to depreciate that asset, what should be the depreciation method, how to even calculate initial cost of the property, plant and equipment, and what are the ways for the subsequent measurement. If I'm depreciating the asset, so which method I need to use. If I'm recognizing the impairment loss, then how to calculate the carrying amount. So simply the entire IAS 16 is having the objective. The objective is all the accounting relating to IAS 16. That is over there. Just a minute. Look at this. The objective of IAS 16 is to prescribe the accounting treatment for property, plant and equipment. The principal issues are recognition of asset. When do I need to recognize the asset? Determination of the carrying amount. Okay. How to decide the carrying amount, and depreciation charges, impairment losses to be recognized in relation to them. Now let us discuss the first thing. What is property, plant and equipment? Let's say somebody is simply asking us a question, what is a property, plant and equipment? Now you need to concentrate on the answer. Okay. The question is, what is property, plant and equipment? Answer to this is, property, plant and equipment is a tangible non-current asset. What did I write over here? Tangible non-current asset. Now listen and listen carefully. The moment I have written tangible non-current asset, it means we are not talking about intangible assets. We are talking about tangible. Second, I have written tangible non-current asset. It means we are not discussing anything relating to current assets. So when somebody is asking you what is property, plant and equipment, so your answer must be it is a tangible non-current asset, okay, having useful life more than 1 year. When we say having useful life more than 1 year, then obviously there is no limit. It could be 5 years, it could be 10, it could be 15, it could be any time period. But the main point is the life is more than 1 year. So property, plant and equipment means it is a tangible non-current asset having useful life more than 1 year. And second, where do we actually use this tangible non-current asset, or where do we use this property, plant and equipment? This property, plant and equipment we use in production. For example, in a factory you are having a plant and the plant is being used for example producing product X, maybe product Y. So this property, plant and equipment could be used in production, or let's say supply to others. Question: what do you mean by supply to others? Dear students, you might have seen lorries. What do lorries do? Lorries are also vehicles, but what do they do? For example, my organization is producing product X. What are the lorries going to do? They will pick up all the stock of the product X from my business premises, and these lorries are going to deliver those products, those number of units of product X to the customer premises. So the lorries which are being used in taking this, let's say, stock from the organization premises and delivering those goods to the customer premises, it means those lorries are being used for supply to others, and on those lorries we are supposed to apply IAS 16, property, plant and equipment. Or it is also possible services to others. For example, if I talk about today's era, so to be very honest, in today's era, in today's time, even the doctors cannot give his or her services without using non-current assets. Obviously, teachers cannot teach without using non-current assets. So it means it is possible we are using those non-current assets to provide services to others. Extremely important point comes right now, or rental to others. This is an extremely important point, rental to others. Question: what do you mean by this rental to others? Rental to others means, let's say I have a property which I have given on rent. Now there's a question and there's a confusion as well. The question is, if we have a property and we have given that property on rent, and we are, let's say, saying we are going to apply IAS 16 on that property. The confusion is that in IAS 40 investment property, we also provide properties on rent. So then how to differentiate that when I'm going to apply IAS 16 on the property which I have given on rent, and when do I need to apply IAS 40 on a property which I have given on rent? Because from both the properties we are getting a rent. So let me give you an example to this. When you can say this, whenever property is given on rent with significant services, then IAS 16 is applied. Now there is only one question: what do you mean by significant ancillary services? Significant ancillary services. The question is, what do you mean by significant ancillary services? Let me give you an example to this. What we have written? We have written whenever property is given on rent with significant ancillary services, then IAS 16 is applied. For example, the excellent example which is even given by the IAS is the hotel properties. Because in hotel properties, we don't only provide property on rent. Obviously, we provide significant ancillary services. For example, as soon as you enter into a hotel, you will find a reception. There will be a reception, and even in most of the hotel, I would say, as soon as you enter into a hotel premises, someone may be standing there to welcome you. And most of the time, what happens? Maybe one or two members of the hotel reception, they go with you, they take your luggage to the room, and even in the room they provide number of services. Sometimes what happens? You may find a card on which it is written, "Don't disturb me," and sometimes you may find there will be different cards as well, like "Make the bed" and all these things. So the question is, in hotel, they're just not providing you the property. They're providing you the property with significant services. So according to IAS 16, when property is given on rent with significant ancillary services, then IAS 16 is applied. The example to this is hotel properties. So in hotel properties, which IAS is applicable? IAS 16. But whenever property is given on rent with insignificant services, insignificant ancillary services, then IAS 40 is applied. Like normally let's say when people provide their flats or maybe bungalow on rent, so obviously they don't provide significant ancillary services. Because if someone is taking a flat on rent, obviously that individual is not going to get the same services which are available in hotel properties. So simply, whenever we have given a property on rent and we are not providing significant ancillary services, then on such properties IAS 40 is applied. But whenever we have given a property on rent with significant ancillary services, then obviously IAS 16 is applied. So if someone is asking you a question, what is a property, plant and equipment? Your answer must be property, plant and equipment is a tangible non-current asset having useful life more than 1 year, which is used in production or supply to others or services to others or rental to others, or the last one is your admin offices. So your property, plant and equipment could be used in any one of these things. One, it is possible your property, plant and equipment is used in production or supply to others or services to others or rental to others, or maybe your admin offices. Look at this. Property, plant and equipment are tangible assets held by an entity for more than one accounting period for use in the production, one possibility, or supply of goods, another possibility. For supply of goods, I give you the example of lorries. Then services to others, third. Rental to others, I have given the example. Whenever property is given on rent with significant ancillary services, then we apply IAS 16. But if we have given the property on rent with insignificant ancillary services, then IAS 40 is applicable. All for administrative purposes. So, property, plant and equipment are basically tangible assets held by the entity for more than one accounting period, and it will be used in one way out of these, we would say 5. So either it will be used in production or supply of goods or services, or for rental to others, or for administrative purposes. Okay. So after property, plant and equipment, we need to discuss one more, a very important concept, that is depreciable amount. Depreciable amount means simply cost of an asset less residual value. Depreciable amount is cost of an asset less residual value. We are going to discuss also later on how to measure the initial cost of the property, plant and equipment, and what is R. We will be discussing that also. Wait for a moment. But right now you just need to know depreciable cost means cost of an asset less residual value. We actually depreciate only depreciable amount. Now look at this depreciation. Depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. A very, very important point. IAS 16 says depreciation is a systematic allocation. IAS 16 is not saying any allocation. What it says? Systematic. Let me explain what do you mean by systematic. What is written for depreciation in IAS 16? That depreciation is the systematic allocation of the depreciable amount of an asset over its useful life. So systematic allocation means, please concentrate on this point. Systematic allocation means according to IAS 16, depreciation method should match with the pattern of economic benefit from the asset. Repeat. What do you mean by systematic allocation? Systematic allocation means your depreciation method should match with pattern of economic benefit from the asset. For example, if your organization says we are going to get same benefit every year, if we are expecting that we are going to get the same benefit every year, then obviously we are going to follow straight line method for depreciation purposes. But for example, today my organization has bought, or maybe we have built a property, plant and equipment, and companies deciding that initially we'll be getting more benefit and later on we are going to get the reduced benefit, and later on the benefit will be reduced. So in such case, you are supposed to use reducing balance method for depreciation purposes. Because why? Because in reducing balance or in written down value method, what happens? Initially you will be having more depreciation and slowly and gradually your depreciation will be reduced. So let me repeat the example. Systematic allocation means depreciation method should match with the pattern of economic benefit from the asset. If organization has decided that we'll be getting the same benefit, for example, more or less in every year, then we are going to follow straight line method. But if company says that we have decided and we believe that initially we'll be getting more benefit and later on we are going to get the reduced benefit, then suitable depreciation method is written down value reducing balance method. Now one more thing. IAS 16 does not say that it is organization will to use any depreciation method. Not at all. IAS 16 actually does not give you the liberty. IAS 16 does not give you the option. IAS 16 does not give you any choice to opt depreciation method. So actually it is not at the disposal of the company which method they want to use. Actually what IAS 16 says, your depreciation method needs to match with the pattern of economic benefit from the asset. So simply we do not have a choice that which depreciation method we need to follow, which means that, now listen and listen carefully, which means that depreciation method is not an accounting policy. Because whenever we are going to say XYZ thing is an accounting policy, you need to remember, dear students, accounting policy gives you the right to choose, right to decide, right to choice. You will be having options. So accounting policy simply means right to choose. But depreciation method, you are not having any right to choose. For depreciation method, IAS 16 says your depreciation method needs to match with the pattern of economic benefit, which means that depreciation method is not an accounting policy. Logically, depreciation method is an estimate. And it is also possible that after 1 year, 2 years, or maybe 3 years, organization may decide to change the depreciation method. Because if pattern of economic benefit from the assets, they are going to alter, then obviously depreciation method we need to alter as well. Now listen and listen carefully. The change of depreciation method is treated as change in estimate. Repeat. Change of depreciation method is treated as change in estimate, and whenever the estimates are going to be changed, they will always apply it prospectively according to IAS 8. So repeat. Change of depreciation method is in change in estimate, and whenever there is a change in estimate, it is always applied prospectively according to IAS 8. So dear student, now I strongly believe you are having a really good idea about systematic allocation. If you are having a property, plant and equipment from which you will be getting more or less the same benefit, then you will go for straight line. But if your organization believes that initially we will be having more benefit and later on reduced benefit, then you must go for written down value method. Now let's go back to depreciable amount. What is depreciable amount? Is the cost of an asset less what? RV. The question is, what is this RV? What is this residual value? Actually, residual value is the estimated disposal proceed at the end of the useful life of the asset. It's just an estimate. Look at this. Residual value. This is the disposal value expected at the end of the asset useful life after deducting any disposal cost. And what is written over there? It should be reviewed periodically and whenever necessary revised. And let me repeat. Actually, residual value is your expected sale proceed at the end of the useful life of the asset. When we say that residual value is an expected sale proceed at the end of the useful life of the asset, which means that residual value is an estimate. We just estimate. So residual value is an estimate, and if after 1 year, 2 year, or maybe after 3 years, we need to change residual value, then we have to change it. And change in residual value will be applied prospectively according to IAS 8, because change in residual value is treated as change in estimate. So if scrap value, if residual value is changing, then obviously we have to follow the revised residual value prospectively. So you need to know that depreciation method you need to review annually, residual value you need to review annually, and whenever the change comes, it will be applied prospectively. So residual value is an expected disposal proceed after, of course, deducting the disposal cost at the end of the useful life of the asset. Another point which you need to know, when it comes to useful life, the question is, what do you mean by useful life? Actually, useful life means how many years current owner actually wants to use this asset. It is possible that today your organization has bought a property, plant and equipment which is having the economic life of 50 years. Means you have bought a property, plant and equipment and the manufacturer is saying, sir, this asset is good enough for 50 years. But your company has decided we will be using this asset only for 5 years. Which means that even though the manufacturer is saying this asset is good enough for 50 years, but organization has decided we are going to use this asset only for 5 years. So which means that this 5-year useful life is an estimate, because it is very much possible maybe after 1 year or 2 year organization may revise the useful life. It is also possible that after 1 year or 2 year organization may say no, we need to go more over and above the 5 years. So simply useful life is an estimate, and whenever estimate changes, it is applied prospectively. So dear student, what we have discussed today in a very small video, we did discuss what is the objective of IAS 16. What do you mean by property, plant and equipment? We did discuss depreciable amount, we did discuss depreciation, we did discuss residual value as well. And let me tell you one or two more things. Then we conclude our first lecture, inshallah. what are those one or maybe two things which I need to add in this video. Actually, we know what is depreciable amount, what is depreciation, what is residual value. We have discussed this. Now listen carefully. According to IAS 16, when actually we start depreciating the asset, according to IAS 16, when asset is available for use, then you will have to start depreciating the asset, even though it is also possible that we are not actually using the asset. But according to IAS 16, when property, plant and equipment is in usable state. So when your property, plant and equipment is in usable state, from there onwards you need to depreciate the asset. It is also possible that organization may start depreciating the asset before its actual use. Repeat. It is also possible that organization may start depreciating the asset before even its actual use. For example, let's say your organization has bought a property, plant and equipment, and let's say they have installed as well, and now the plant is ready to use, but organization is unable to use the plant because before using the plant, organization has decided to give training to the employees for 3 months. Now what is happening? The actual use of the property, plant and equipment will start after, let's say, 3 months. But since IAS 16 says when your property, plant and equipment is in a usable state, then you have to start depreciating the asset. So I just give you an example. It is also possible that actual use comes later on, but we start depreciating the asset even before the actual use of the asset. It is only possible when we have to train our staff for using the asset. Okay, dear student, what we are going to discuss in the next video, let me tell you. In the next video, we'll be discussing how to calculate initial cost of property, plant and equipment. Initially, according to IAS 16, property, plant and equipment is measured at cost. Then how do we calculate that initial cost of the property, plant and equipment? In the next video, we'll be discussing that, inshallah. Second, when it comes to subsequent measurement, then according to IAS 16 in subsequent measurement, we have choices. Either you can go for cost model or you can go for revaluation model. When we say you have choices, it means that's going to be your accounting policy, either to apply cost model on your property, plant and equipment or revaluation model. So we'll be discussing initial measurement, subsequent measurement, and we'll be discussing the accounting. That, for example, if any organization is following revaluation model, when the revaluation comes into the books, how do we recognize a revaluation? And after revaluation, when we depreciate the asset, then what is the accounting treatment? And after revaluation, if the impairment loss comes, then how to recognize that impairment loss also? And we'll be discussing a few more things, like we'll be discussing the concept of complex asset. What do you mean by complex asset? We'll be discussing that also. So there are a number of things which we'll be discussing in the next video, inshallah. So till then, dear students, I would just say thank you very much. I will try my best that I'll be discussing the conceptual framework with you side by side. Like in this IAS 16, if you just give me 1 minute so that I can give you an idea. Look at this. In the next video, or in fact we can, in the next video we will be starting, we are going to start the next video from this recognition criteria. But look at this, what I have done. After the recognition criteria, I have given conceptual framework in my notes as well, so that we really need to know the conceptual framework from day one, because on each IAS and on each IFRS is normally, I would say, most of the time what is happening, conceptual framework also says something relating to that asset and something relating to that liability. So we need to discuss conceptual framework from the start. So in the next video, inshallah, we'll be discussing recognition criteria, conceptual framework, and all those topics which I mentioned just maybe 2 or 3 minutes ago. So till then, I would say thank you very much and Assalamu alaikum.